Hi and welcome to this Blueberry Markets video update with me, John Kibler, head currency analyst. In this video we're going to be taking a look at the Forex market wrap, highlight the news that happened this week and some charts of interest. So starting off with the news that came out this week, there was some interesting data across the board really, but the main focus this week was Wednesday. So we had the RBNZ rate statement and cash rate, and you can see that they hiked interest rates by 50 basis points to 2%, and then the rate statement followed with further rate hikes to come and being more aggressive with potentials for the rate to be around about 4% by 2023. So more rate hikes to come, probably some 50 basis points in the next few meetings, but essentially hawkish outlook for the RBNZ. We then had the FOMC meeting minutes, which I thought investors would definitely keep an eye on going into this week, and the Federal Reserve remained fairly aggressive here, talking about further hikes as well, and potentially that they're going to see more hikes very, very soon. So interesting data out this week. We also had some other data as well. We had some GDP data coming in a little bit lower, and some core PCE price index which came out as forecasted. Going on to some charts of interest then. So we talked about Aussie US dollar for long opportunities going into this week. Like the idea of being a buyer of this market, not only due to the strength meter, which was suggesting that the Aussie was the weakest currency but in a reversal zone, and the dollar the strongest but also in a reversal zone. So essentially what we've got is two currencies really far apart on the strength meter, and usually that can cause a reversal. This combined with the upward trend that we were seeing in the market at the time suggested that the longs were more likely to happen going into this week. We did talk about a couple of key areas with the volume profiles. We talked about the volume area high as an area of interest, and we talked about this point of control, and price unfortunately didn't get back to the point of control in the end. Instead, it used the value area high to form an inversive head and shoulders pattern and continued to push to the upside. And now we're in a decent spot for some potential further upside, with upside targets of 72.57 looking quite likely here for Aussie US dollar. Dollar yen was also something we expected some further downside on, only in the near term. We did also talk about potentials to come back towards the point of control, just because we expected the stock market to have a little bit of a lift this week, but that didn't really stop dollar yen moving lower. It hasn't created a huge downward move, but we talked about the value area low here at 127.96 as a key area of structure, and you can see price held once more in at this position going into this week, and price fell away. It then retraced back up, retested a really nice pocket of low volume down through here, and again found some resistance and traded to the downside. So yen still looking to gain a little bit of strength here at the moment. Gold, like the idea of being a buyer of gold going into this week. We were talking about a couple of areas of interest again. Value area high was something that was quite interesting to us. Price has not retraced back to here, so there was no real opportunity for us to get in on gold. Price did come into this high volume node through there and did start to trade a little bit higher after retesting some key sort of resistance levels, but gold mainly flat throughout the week. If we look at the price action, it's mainly capped between 1840 and 1870. So really this sort of $30 sort of dollar range here is where price is just kind of moving in between at the moment, and I think we need some kind of catalyst to see price break that and move higher at the moment. Finally then, the S&P, light ideas to get long above 4,000. We also talked about if it was to reject, it could start to move a little bit lower again. This was all dependent on the Fed stance, really. The market really looking to see if the inflation rates are continuing to move higher. If they were moving higher, we could see some further downside to stocks. But with the stock market, we're expecting a short-term bounce anyway. We've been down straight for 9 weeks, so I was expecting some kind of rally to come from the market at some point. Price mainly consolidated. We consolidated in this low volume area through here. As soon as we kind of breached it and then moved above last week's point of control, we moved through this area very quickly. We had a short-term bounce at this high volume node, but prices again quickly breaking through to the upside, and now we've broken last week's high. Could be some potential to see some short-term longs here in the S&P 500 as well. So hope you enjoyed the content this week. If you did, leave this video a thumbs up, subscribe to the YouTube channel to see some more Forex trading content. I'll speak to you in the next video.